Prasun Gajri joins us, Chief Investment Officer with HDFC Life. Prasun, what do you want to start with? Equity markets, bond markets, or the currency market? Everything is down.
It doesn't really matter, I guess. Yeah, these are the kind of markets when everything else takes a backseat. There is no concern for valuations. There's no concern for whether a stock is looking attractive from a valuation perspective or not, or it's just one-way street. The buyers have disappeared. There's no liquidity in the market. Even if you want to sell, you can't sell. The prices are falling. So clearly a market which is in a bit of a panic mode.
Prasun, what is happening with the market? Because FIR has net sold about 500 crores in the cash markets in Friday's session. Yesterday as well, it was a sell figure. Where does the selling stop? Because that's the next question you would ask. There is talk about Fed tapering come September, and if that were to happen, perhaps we are not going to be the only ones. The weakness is going to be pretty much across the globe.
See, the point is it's very difficult to make sense of the current noise. Yes, the markets are in a free fall, and that is something which is a given. So there's not much you can do to change things at the moment. So even if you want to alter your portfolios in this market, it doesn't really make sense. And you will not probably be able to, because the volumes may not necessarily be there in some of the names. So let's try and make sense of a little bit longer term. My own sense is that this is the fear of Fed tapering and the current account issues are a little bit overdone in my view. My personal view is, given the last two data points on trade deficit, the current account is going to come down significantly, the deficit, even more than the government anticipates in my view. And that is something which the data should be visible over the next 3 months. But the problem is, while the current account deficit would come down, we are seeing capital outflows, and therefore even if the current account deficit comes down, the market fears that the capital inflows may not be adequate to really support that. To my mind, that is a little bit of an extreme reaction.
Prasun, let's talk about market valuations. And if I look at the history of Indian markets, with the exception of 2008, when they've corrected, they pretty much have bottomed out when the PE multiples have contracted to about 10-11 times. Current PE multiple based on FY14 estimates for Indian markets is about 13 to 14 times, which means based on historical parameters, the PE multiple for Indian markets could correct by about 10 to 15% more.
I don't think that's the way to really look at it, because if you look at the valuations of barring maybe 20-30 stocks, the rest of the markets are pretty much at historically low valuations. So it's a bipolar market. Only now in the last few days, when the markets have been falling fairly quickly, we have seen no respect for any sector. Maybe IT has stood out a little bit, but pretty much the rest of the sectors have really fallen at the same pace as the more beta sectors, so as to say. So I don't think anyone is really looking at valuations at this point of time. I think valuations have really no meaning in this kind of a market, where the move is not being driven by what is happening to the equity markets or the fundamentals or the earnings of the equity markets. It's clearly driven by the way the rupee is behaving, and rupee is behaving in this manner because the sentiment is extremely bad, and nobody seems to believe that government will be able to tackle this issue. So it's a perception issue at the moment. Until that is corrected, I think we will remain in this kind of a mode. And equity markets, unfortunately, will bear the brunt of it. And the fact of the matter is, even during this phase, we haven't seen any major selling by FIIs. It's not that there's a lot of money which has flown out of the equity markets. So while yes, the numbers have looked negative over the last 2 days, they are not very significant given the fall of the market. And so that's the bad part in a way, because markets have fallen, markets have really cracked without anyone really being able to get out of it. So that is my worry, and I don't see an end to it till the rupee really stabilizes. And when the rupee will stabilize is anybody's guess at the moment.